Good morning, David Kern here with the CBSAM Debrief. It's Tuesday the 22nd of November and US market's been closed about 9 minutes now. We're down over 2%, 2.02 to be precise, or 238.22 points. Pretty well everything's down around 2% over in Europe. The FTSE 100 down 2.62, the S&P 500, 1.71, not quite 2 there. Same with the Nasdaq, 1.77 with the broader indices there. But bigger numbers in Europe there, with the Euro Stoxx 50 down 3.42, the DAX down 3.35, and Europe, we'll have a look at those futures numbers in just a moment. But what's clearly got everything, everyone pretty nervous here, is the inability of the super committee to come up with a total of $1.2 trillion in savings, and so that ends up with the US now in a sort of similar situation to some of the European countries that have been unable to address these issues concerning debt and greater outgoings than those that are coming in. Also talk of France losing its AAA credit rating, and this really starts to feel, or I guess everyone's aware of this, but it starts to feel really very, very serious indeed, and the possibility that this really will all start to fall in on itself. Really, you can see this global contagion really start to come to a fore. We've got Japanese government debt to GDP ratios right up there, of course, with their spending on the recent tsunami, and on it goes. So let's actually have a look here and see what the futures are holding for our part of the world. Okay, so we're down 61 here now, 4,125. We are now back through a fairly key level here, and I guess 3,800 is clearly the next major level of support. There may be one or two minor levels in there in between, but really is looking pretty grim. Let's move on and take a look at some of the commodities. We have crude. Now, I don't know if Jonathan mentioned, I didn't actually get to see his week ahead report, but certainly talking about the fact that crude really doesn't belong up here. The only thing that's keeping it up here is the geopolitical concerns regarding Iran and Israel not being too pleased about their nuclear ambitions, and the saber rattling that's accompanying that at the moment. At this stage, it doesn't look likely that that will amount to anything more than that. The sanctions are posed for Iran, but at this stage, yes, no real risk of conflict. Obviously, if there was, then a short trade here would potentially prove costly, but certainly we're of the view, or rather, Jono is of the view that crude is worth shorting here, or any sort of rallies are probably worth looking at as well. Moving on to the rest of the soft space here, we can see pretty much sell-off right across the board. Looks like orange juice is about the only standout there. Sugar. Looking at bigger moves here, looks like cotton had a pretty big move here, down 3%. Corn down 2%. Cocoa 1.5%. Coffee 0.77%. Wheat 0.94%, nearly 1%. Soy 1.73%. Oats 2.76%. And soy meal future at 2.95%. So pretty much across the board there. Copper also down 2.5% odd, and gold, can't figure out why that's continuing to come off here in light of some of these concerns. It seems like everyone's just going for the US dollar. So gold at 16.83, and silver down 2.55 at $31.66. And there we see the currencies with US dollar strength coming through. So the euro buying just 1.3511, the pound 1.5664, US dollar buying 76.9360 yen, and the Aussie now well below parity at 98.70. The US dollar buying 1.0367 Canadian, and the US dollar buying 0.9158 Swiss francs. Take a look now at the economic calendar. Really not much data out today. We had those numbers out of the US with home sales pretty much in line with expectations. Although that monthly number for homes was better than expected, but wasn't enough to create any sort of meaningful turn in the sell-off there on the Dow. Going through to Canadian retail sales early on in the tomorrow morning rather. We've got GDP annualised for the United States, expecting a 2.5 number there, coming out early this morning as well, early tomorrow morning as well, I should say. That takes us pretty much through to Wednesday. Let's take a look now at the Balkan Trader. Now, one of the things that's come up domestically is the new mining resource profits tax that's coming through, and the controls that are being proposed and expected to pass on coal seam gas exploration. Now, this will throw up another barrier for coal seam gas plays. They have been doing pretty well lately. I haven't had a chance to do too much resource on this, and I've just picked one very much at random, so don't do your own research on this. But Metgasco here had a pretty good run up over recent weeks and in fact months, and seems to be rounding out here, looking a bit toppy, and I would have thought that there's an opportunity to get in there and short some of these coal seam gas plays. A little bit more to follow on that once I've had a chance to look further into things. Okay, let's move on and have a look at the index for the local market. Here it is here. Here are these levels here that we've touched on previously, back in October, back in September as resistance. Early November we touched down here, and here we are again. So we will definitely take this level out today, I think it's fair to say. And then we're looking back down at these next levels around 4,000, and then stop back down at 3,800. So really not looking very pretty at all here. That's a rounding pattern there to my eye as well. And moving on to look at just follow up very quickly here on a couple of these gold stocks that I've talked about, I think last week, and some of them starting to look like they could be on key levels of support. Well, we can just kiss goodbye to that one there. That's gone. Kingsgate. What else were we looking at? Medusa. Similar level, taken out some significant support there. Silver Lakes Resources, just loading up now, and that's coming off as well, albeit not by as much. St Barbara. Yeah, rolling right over here. So that's turned into a bit of a, yeah, not a good recommendation for anyone that got in there, sadly. But stop losses, as mentioned, are key. And in fact, going long in this market right now does seem to be certainly going against the trend at this point. Harvey Norman looking like it's coming back down to touch on $2 here again after getting back up near my entry level. As mentioned, has paid a reasonably good dividend, but not looking really crash hot here, and certainly want to be out of that trade if it goes below $2. Seeing what else we can have a quick look at here. US dollar index, let's have a look at it. Okay, so we continue to make higher ground here. 78.44. There's really not seemingly terribly much to stop that from being up at 80 fairly soon. Okay, well, I'm going to leave it there. Fairly grim prognosis for today. We have seen, just to put some perspective in this for our local market, that strong buying has come back in at that 3,800 to 4,000 level. So if you're prepared to take the view that there really is some great value down there, then we'll continue to watch what happens. If we are in for a global economic meltdown, then that level won't start to look that cheap very soon. But I don't want to forecast worse scenarios than exist right here in front of us. So let's watch and see. Okay, that's it from me. Thanks as always. Until next time, bye for now.